Welcome to 𝐄𝐓𝐇𝐄𝐑𝐄𝐔. We talk about investing, finance, and professional development. As recording time approximately noon on October 7th on Friday, Ethereum closed $1,334, about 1.35% so far. On the overall crypto market, I would say across the spectrum, we're relatively suppressed at the moment. Across the spectrum on the key coins, down about 2% so far. While the altcoin side of the house is also kind of mixed bag, across the spectrum. On the equity side of the equation, we are a little bit more down than up, obviously with a lot more negative verbiage that's being percolated on the media front, which we'll dive into in a bit. On the stock front, it's also sliding down as well. Seems like the topic of inflationary pressure is really in your face. But let's take a look at what that really means in your face, right? So let me just shift my screen to take a look at the news collectively. So obviously today was unemployment or job number report that came out depicting the month of September. And you can see that on a high level synopsis, the unemployment rates fell by 3.5% in September, and also payroll has risen by 263,000 as job market seems to stay strong. And with respect to some of the key points that you see in front of us, non-farm payroll increased by 263 for the month, short of the Dow Jones estimate is 275,000. Unemployment rate was also 3.5% down 0.2% point as labor force participation rates edged lower. On the average hourly earning rose by 5% from a year ago, slightly below the estimate. Leisure and hospitality, healthcare, and the business professional services lead to the sector gain, which makes sense with the COVID and obviously with traveling. That happens, in the bulk of the summertime period. And why are we selling off despite the seemingly positive job numbers that came out so far? It's due to the fact that despite this summer pump, if you may, right, depicting higher payroll because of larger demand for hospitality, leisure, etc. during the summer time frame, which is very typical, right? And we are just aligned, not significantly a lot more, but we are just staying within the spectrum. But with respect to the questions around, how the economy would be turning out going forward, around the CPI report that's coming out, around the FOMC meeting that's coming out in a month from now, how are we dealing with the inflationary pressure, right? And despite the positive report, it seems like a lot of economists are depicting that contingent on the Feds being more proactive on being tactical about their rate hikes going forward and giving us a plan of how we're going to be tactically turning the economy around, which seems like there's still a question mark around it. We are still going to be in for more pain coming with more corporate downsizing and with respect to just trimming across multiple different financial asset classes, right, on the equity side. So with corporate companies shrinking, with guidance also declining, earnings will also depreciate and subsequently pulling out money from the market. So people want to be more and more cash heavy. And when you're more cash heavy, crypto is not the solutions that it seems to be, right? People, historically thought that crypto was some sort of like a deflationary type of assets, which is true, in some aspects. But with respect to the downturn right now, collectively we've been down 75-80% across the whole market so far. We're definitely in this recessionary environment, putting into something that's doesn't have the most securitized type of characterization so far, would incentivize people to also pull out their money away from crypto. So it's definitely like a elongated water torture, and it seems like we're just going back and forth at it. So we are having some sort of like a whiplash type of experience across the market. With a lot of zigzags, like whip up and then whip down and then whip up and then whip down, if you get what I mean, right? So the job numbers came out okay, but obviously, we're still at the mid of the question mark, right? Are we going with higher rates this time? How was the inflationary pressure with the higher rates that we did already? So we don't know, right? So we'll see how that will progress, and we will only see progression unless you know, we are seeing some, you know, strong efficacy coming from the previous heights so far, right? So without wasting more time, let's just dive into the technical. Respect to recording time of 12:03 p.m. on Eastern time, we are staying flat, right? We're basically at 1350 again, right, as a non-resistance level, non-substantive resistance level, sorry. So right now, on the weekly front, you can see that we need to cross down and cross up. So right now we are at the 43 out of 70. Need to kind of come down to ideal level 36 out of 70. So right now on a daily and weekly are still bearish. But on the monthly, we should ideally see some you know, long-term succession going forward as we progress, you know, upward from here. But it's gonna take some time, you know, for us to capture that Santa Claus rally. We should ideally see some upward pressure by, you know, based on historical affectation around like late November onward until February, because of tax season, which will obviously be counterproductive to people holding on because they have to pay tax from that perspective, right? And then on the Bitcoin side of the equation, you can see that monthly is also, you know, looking to plateau and consolidate. Weekly, it is you know, still quite bearish, right? We have double heads, and also with respect to the daily right now, it is also bearish as well, right? With this separation become larger and larger and larger, it is looking to come, you know, looking for ways to come down eventually. So daily and weekly again bearish, just as like Ethereum, not a surprise. Like this is what we've been talking about so far, and Bitcoin eventually cracked below 20,000. So we're at 19,500 at the moment right now. So heading down to 18,500, 17,500 respectively, which will be the next level support. And then after 17,500, which we've tested before, would be 15,500, and then subsequently all the way to 12, and then 10,000, and then 7,000 from there. So it's a really sharp drop based on a technical front. So something to be mindful of, right? Do we see that happening, like let's say going to like 7,000? I highly doubt it, but it's, you never know, right? In respect to Tesla, just to take a look at on a selective basis, monthly is still, you know, doing the same thing, quite, you know, it's looking to plateau, so but it's still bearish. Everything is kind of pointing down at the moment. Weekly just form a death cross, so that's why we're capturing the, you know, the drop from here. So like right now, the reason we are at 225 is because we're consolidating, testing the level that we had before a bunch of times in the past, right? You could see a bunch of, you know, consolidation with half here, and bunch of consolidation with half here as well. On a daily, it is also looking quite bearish, right? You could see that we need to find a landing zone despite how oversold we are. But, you know, it's not a terrible dip actually for Tesla, despite it being down 7% previously already. So it's another 5%. So collectively, we've been down about 12, like I think 12-13% so far, if I'm not mistaken. So definitely, you know, it's dampened because of obviously the negativity that we're seeing across the market. So it's definitely, you know, gut wrenching, but despite a positive drop numbers, but, you know, media is obviously, you know, kind of water downing, and, you know, kind of washing it down from, you know, what seemed to be positive, but is actually, you know, still a lot of lingering outlooks that we don't know yet. So appreciate you for dropping by again. Have a good day and take care. Bye.